All right, everybody. Hey, we are back from our break, and you are in store for a real treat here. I was honored to have John Matheson, who's our next guest here, on the podcast a few weeks ago, and it was one of the top downloaded episodes for last month, and it's still getting a lot of downloads and a lot of plays on their stuff. So great stuff. And he was also cordial enough to send over some books that we sent out to our WCN membership members who have been taking photos with it and sharing across social media, John. So we're excited to have you. Even though when you were 14 when that last Van Halen song came out, doesn't mean you're not young at heart, brother, right?
That's right, gang. So yeah, he had on Ain't Talking About Love from Van Halen 1.
John, did your computer freeze there, or is it on my end? John? I think John's froze there for a second here. Let me do this. Oh, it must have been on his end. He'll be back here in just a second. I'm sure logging on there, making sure. Not on our end. So internet can be a little sketchy in some other places. So he'll be back. There he is.
There we go.
Yes. I unshared my screen. You froze up there, buddy.
Yeah, we got a few little storms bouncing through where I am. I'm in a remote location today. Saturday afternoon, right? Getting it done. But this will be good. We should be fine now.
Yeah, so if you just want to hit the share your screen and pull it.
Yeah, let me get you to my screen. And, oops. Resume. Okay, can you see me now?
Yeah, go ahead and maximize that because it's just.
Yep, good.
Go.
Better?
Perfect.
Right on. All right, gang. Well, listen, welcome. We've got some fun today. I love when he does this to me. He promos me, and then I have to live up to it. So I have to now rock the place. So as he may have said to you guys, we are software and education with our company. And today what we're going to do is I'll do some quick introductions, tell you about us. We'll get into our guide to lender financing, a business or property, which I think you guys have already seen some of the book stuff, but we'll get into that. We'll get into commercial real estate investor challenges and solutions, our software, and then we'll demo the software, which I think you'll have a lot of fun with once you see that. We'll recap how you can benefit from it like we do. We got a special offer free at the end. We'll go through some of the stuff that some of the people using our software say, and then we will get into some wonderful Q&A for you. So if you don't mind, if you can hold the chat and the questions till the end, it'll let me just kind of blast through it for you and be productive, and then we'll have plenty of time for all your questions as we go along. So today, welcome to meet me. I am the founder of CLS Software. I'm also a commercial real estate developer and property investor, like many of you. So for me, just to give you a context so we can frame the discussion, I've been doing this not since Van Halen 1 came out, but pretty close. I'm almost 30 years now into the business. As far as my career goes, I've survived 3 recessions, which we're trying to make sure I don't come back on a call like this and discuss a 4th recession, right? But along the way, I've probably completed around 50 million of transactions as a principal or a professional, and I'm currently involved in the ownership of, or as a JV partner in a total build out of another 70 million worth of stuff. And that's in commercial real estate. So it's not going to surprise any of you that I have arranged quite a bit of commercial financing over the years, as well as private equity capital to be able to do what I do. But you know, what's really fun is I started out real small. My first transaction was obviously a long time ago, but it was for $30,000. And what I had done is I had decided that I wanted to just be more than a developer. I wanted to also be an investor, and I wanted to be able to just own as many properties as I could, which is probably what most of you are thinking. So my first transaction was small, but as I got bigger, realizing the small transactions are fantastic because they form your foundation. They're the stepping stone for you to complete your or to improve your portfolio over time, but to advance to the next level, you've got to get into larger properties. Many of you already know this, which is something that most of us in business aspire to anyway. You need to level up and get into legitimate commercial bank financing in order to do this. So to level up, let's face it, you need capital. We all know this. And Scott and all of us spend a lot of time talking about ways to arrange capital. That's what we're going to be able to do today as we get into the software. But, you know, what always frustrated me and probably frustrates a lot of you when I started a few years ago all the way up to, you know, now was the unpredictability of the commercial bank process. It always seemed like the banking process was a mystery, right? And if any of you know what I'm talking about going for a bank loan, you walk in, and the old way was we all would walk in and do what? We would present to a banker, and we'd have nerves that were somewhere between, we had a little trepidation all the way to absolute dread of the process. So we'd sit there, we'd present, and we'd have whatever presentation we used, and then we would leave. And what would we do? It was a 4-letter word. You know, what would we do, guys? We would all wait, and we would wait to hear from the banker. And we just decided that that was not something that we wanted to continue to do. So what was the solution? So along the way,
I thought the 4-letter word would be pray.
Yeah, pray, right? You know, I mean, just right. I mean, I'm sure everybody out there gets it, right? The anxiety that goes with financing is so critical to your transaction too. I mean, if you don't have financing lined up, we all know what happens at the end. And financing on equity, financing on the debt side. So along the way, CLS software was first used by Dan Crowley, and Dan was in private practice as a loan consultant, and that's how I met him. And he used the software to vet one of my transactions, and when I saw it, I just went insane because it was just the other side of the last recession. And I said to him, you know, I need to get this. And it was on his computer, and he was using it in his private practice. And so we decided that we'd venture together and put it into the cloud, which is where it is today. But as you guys will see, as we work the thing out for you in a little while, what's happened along the way from that moment, all the money and time and sweat and effort that goes into getting it to where it is, now makes it possible for all of us to be able to access it. We have a goal at CLS. There's somewhere around 30 million small business owners out there, around 3 to 6 million property investors at any given time. We want to serve as many as we can. We're trying to get to 1 million customers as quick as we can and to be able to serve all those people. Our locations are growing. So now we have 3 locations, as you can see, and we're featured across all media outlets for you guys to find us. And I tell you this stuff so that you can find us and you can see what we're trying to do, which is actually change the way that all of us do commercial property financing. So what is CLS software? It's a do-it-yourself software to screen your investment property or business loan against common bank guidelines. You're going to be able to know what you qualify for, what's your loan amount threshold on a property to buy a note. You're going to learn today how the banks determine how they actually lent on the transaction in the first place. And you're going to know if you qualify before you even apply. Before we get too far, though, Scott talked about our book. Book's a fun resource. And we wrote the book to be able to be a simple journey for somebody raising capital for a commercial property transaction or for a business. You can go right now to go.getoncls.com/notecamp, and you can get that free. So this is one of those limited time offers that hangs out, you know, during these type of webinars and seminars that we do. So there'll be a clock on it. You probably want to just go there now. It's a simple, put in your name and in your email, and you'll get access to the book. All right. So again, go getoncls.com, Note Camp, free book from us to you. Scott's got some hard copies he's distributed, but we want everybody to get a hold of it, at least in ebook fashion, and be able to then have the knowledge to be able to walk through this process and not have the anxiety along the way. Okay, so challenges we all face, right? Here we are as a commercial real estate investor. And in the finance space, what don't we know? Well, we don't know. We don't understand how lenders work, do we? Really, to originate notes. We kind of have a rough idea if we've done a few, but we really don't understand how they originate financing for us to buy properties, why they tell us in certain cases we can't borrow the amount we ask for. The statistics are staggering, depending upon what source you go to, be it the Federal Reserve or the Small Business Administration, or whoever's out there in this space. Seems like there's rejection going on between a half and a third of the time on loan requests. Now, we do a lot of work with bankers at Commercial Loan Success, but we're not a banker. We connect our customers to the banks, and the bankers say, hey, we're not here to reject. We just find that our biggest problems are borrowers that come in that don't understand what our guidelines are. They have unrealistic expectations on us, or they're unprepared. And, from the borrower side, we all say, well, wait a minute, the numbers work. Why aren't you giving us the loan? So there's that disconnect, and we want to bridge that gap as commercial real estate investors so that we can have an accelerated transaction compared to the old way. Remember what I said in the beginning, we wait. Well, we don't want to wait anymore. We want to get an answer from a financing source, be it a bank, private lender, or capital company right away. So let's get rid of anxiety and uncertainty in the process of obtaining financing. And we all know completing transactions on time and getting our note financed, be it for either an acquisition or if we're going to buy a note or if we're buying the property, it's all a problem. So solutions in the market are what? Well, we can use software. And today we're in 2019, there is software. So there's plenty of softwares beside ours that will vet transactions and do pro forma looks where you can adjust on an apartment cash flowing property, you can adjust your income and expenses out over 10, 20 years and look at it. But what they don't do is they don't tell us if our transaction is lendable. And what we wanted was a tool that just did something really well. And that is, it answers the question to a commercial real estate investor, is the first mortgage financeable? Yes, no. Is the private mortgage or the private lender financeable in the same transaction? Yes, no. We also need to determine finance thresholds so we can know the purchase price of a property or a note. And if we use lender style analytics, we can now communicate directly with the lender. So interesting, as you guys know, the way that it tends to happen out there is they're going to take our NOI divided by a cap rate. We hate that. Any one of us who has dealt with an appraiser on a cap rate knows exactly what I'm going through. And, go try to find a definition that we can live with in any kind of business setting of what cap rate is. And our arguments will start, we all want our cap rate, if we own the property, to be lower, right? If we're going to buy it, we want it higher. It's just, but what is it? And how do we can see different cap rates on different properties in the same town, can't we? So we want to determine financing thresholds a little different way and be able to still use cap rate, but also work within the confines of what is the lender actually going to say. Now that works for us both as a buyer and a seller. So if we're looking to buy, we want to know we can finance. If we're looking to sell, we want to know if our buyer can finance. So we're going to look at this both ways as an investor. And then we want to communicate with lenders to accelerate the transaction from start to finish versus having it be a wait, and then, Scott said pray, and then who knows what happens to us along the way. So what I've got here is, hopefully you'll be able to hear it. If we have on the computer audio, it'll work. If not, I'll share with you after. It's a 2-minute quick video on what our tool is. So you'll be able to see it, and this will set up for the demo that we'll do for you. So I'm going to play this. Hopefully you hear it. If you can't, I'll get you the link to where it is, and it'll be something that we can watch down the road. We'll take 2 minutes, and we'll watch this little explainer video on how we developed and how we use the software. Oops. There he is. There he is.
Fortunately, we're not getting any audio off of that, John.
Oh, we're not? Okay.
Yeah.
All right. So what I'll do
Maybe
is,
your headphones plugged into that?
yeah, I'll stop, but I'll tell you guys where it is. You know, sometimes with Zoom, if we don't have on the computer speakers, all you'd be able to hear it through is my mic. So I'll get you guys where this is. But essentially what the video is doing is just walking you through what the software is about. I can get you the link where this would be accessible as we go. So what else do we do? As CLS, so here's where we'll go to get this video. Get on CLS.com. This is the video right here. So for anyone who's interested, you can just go to getoncls.com and be able to watch the video right there, okay? But as we move on, what is CLS? So you can find us at commercialloansuccess.com, and here, just a lot of information. But who are our users? Business owners, income property owners, property consultants, commercial agents, brokers, typically anybody who's doing any kind of commercial property financing is now using our software to be able to help forward their business and know they qualify before they apply. Products that you guys will like for today. We have business finance for people who are doing just traditional business loans, but for apartment property. So this will be for anything that cash flows 5 units or more. So this is not a 1 to 4 family book that we're in. For underwriting guidelines, we're dealing with commercial property where it's 5 and up. Now, plenty of people use our software for 1 or for 2, 3 family, 4 family properties, but it's not underwritten the same way once you get into commercial bank guidelines. And then of course, commercial property. And this encompasses either just your garden variety commercial building, or your little strip mall, or your mixed use building, my favorite, right, where you have commercial on the first floor and you have residential as you go up top. So as we frame the discussion for what you're going to see, when I told you in the beginning, no, we want to serve as many people as we can, we've compressed this price to be just absolutely as affordable as possible, to be able to know and have a competitive advantage over your competitor and your banker as you actually go in for a loan. So as you get rolling through this for a couple $100 a year to have a dashboard to be able to vet as many properties as you like, you'll start to see that, you know, we've made it to where that's certainly not an impediment to being able to move forward. So as we move into the software, we log in here. And what I'm going to do is I'm going to demo for you the software today so that you can see what all this is about, where all the excitement comes from for what we've created for people to be able to use. So I'm going to go into, I've actually, to save time here today, I've vetted some transactions that I've already preloaded in the software, the information, but I'll walk you through it. So I am now at my dashboard. This is me. This is my development company. And I can start a new analysis, and or I can go to the resource center and get any kind of help or information or education I need to be able to determine how lendable my transaction is. So in this case, I'm going to walk through a pre-prepared transaction. All right. Make sure everybody can see here. Okay. So for the software preparer user, all I'm doing is putting in my name. I'm going to do a refinance or a purchase on this property. Actually, I'm into the refinance screener. I'm going to go back to my dashboard. This is the beautiful thing about live, right? I'm editing the wrong deal. So I'm into a property purchase. And Scott, can you see this okay?
Yes, sir. Sure can.
Everybody can see it. Great. Okay, so all I've done is I've entered into the software. I've come in. I'm in the preparer user. My analysis is I'm going to look at purchasing this property.
John, can you do me a favor? Can you maximize your screen so that we can see it a little bit bigger? Because it's
sure.
Yeah.
Sure. How's that?
That's better. Yeah. Perfect.
Better?
Thank you.
Terrific. Okay, so I'm inside of the software now. I logged in off of the website, and I'm inside. So I'm behind a username password protected area. Nobody sees this. This is totally confidential to me. No banker sees it unless I decide to share the contents of this with anybody. No one sees it. This allows me to sanity check transactions all day. So I might have found this on LoopNet, co-star. I might have had an agent give this to me, and I'm looking at, do I want to buy this apartment building? So I put in my numbers. I'm doing a purchase analysis. And then since I'm the buyer, I put in a little information on me to communicate with the lender. Next, simple. What's the address of the property? How many units? So in this simple transaction, I've got a 12 unit transaction. All right, so 12 unit building that we're looking to buy. All right, next I'm going to put in, oh geez, my quick mouse. I'm going to put in the financing parameters. So what kind of loan is it? It is a purchase. So I'm going to tell the software it's a purchase. Let's say we're buying this. Remember, I've preloaded all this. So let's say we're buying this for $1 million. The software has a lot of tool tips along the way. It's very intuitive for all of us walking through financing, and it's got some presets. Most of your commercial bankers are going to originate a transaction at 75% or less loan to value. Now, we can get 80% in certain circles at capital companies, and we may be able to even do better in certain spots, but let's just work with general terms. So if we're buying property or we're going to buy a note, this is how it all started. All right, they went in and they did usually a 75% loan to value. So the software presets, we can do a fixed term, we can change terms, amortization schedule. Maybe it's a 20-year. I've got this one set at 25. And our mortgage principal is determined as a loan to value of 75%. I've put in a 6% rate, just generically rounding for today. And now I'm getting into my borrower funded sources. So applicant cash, right? Always a big deal for the lender. So I'm putting in $150,000. But as you guys know, I just showed you $1 million purchase price where I've got a $750 loan. So the software is telling me that I'm short. Where am I getting the rest of the money? So let's say I got a buddy or a JV partner, or I've got a private money person, equity investor, family friend, whoever coming in, and they're going to give me $100,000, all right, toward the transaction. And let's say the deal I make with them is I'm going to manage the building, and then I'm going to do a refinance down the road to pay them back. In the meantime, I'll give them 6% interest, which I'm showing here, and then maybe I'll give them a little equity kicker. But that deal would be somewhere else. It wouldn't be in the actual financing portion. So the software starts doing math for us, tells us our monthly payment, tells us if we're paying 6% to that friend, what our monthly payment is, and it starts to determine, is this transaction going to be doable for us? Okay, next up, we're going to enter our income. So where did we get our income from, right? Who gave us the information? Is it the seller? Is it the seller's agent? Who gave us all of it? All right, important that we know where our source of income is. But when we get it, we've been told on the property, again, we're going to buy it. So somebody told us it's 12 units. It's 11 occupied. Pretty cool. The average collected rent per what we've been handed from, let's say the agent, was $1,400 a month. Let's say that we believe we might be able to bump rents to $1,800 a month. So we're going to enter that here. So I've put in, it's 2-bedroom units. There's 12 of them. 11 of them are occupied. They're telling me it's $1,400 a month coming in. I'm going to trust but verify all this for now. And I'm going to say maybe I can reposition and maybe I can raise rents. Maybe I see something in this market that will allow me to be able to increase. Okay, so the software starts to do computations, and for all of us investors, we get to geek out a little bit over what's happening with the property. So next we have to put in, do we have any supplemental income? All right, do we have, in this case, we have laundry or other at $400 a month that's coming in. Maybe we have a little parking. Whatever we have, we tell the software what it is, and it starts to compute our supplemental income. Interesting, it'll start to geek out on what our efficiencies are. You can see we're not running, this person's not running a very efficient building. Calculated at the current rental rate of occupancy, we should be getting more rent. We should be more efficient on this building. So we're going to move on to what are our expenses. So where do we get the source of expenses? Tax return, CPA, annual report, seller's agent, right? All pertinent stuff for any of us who are doing these transactions. Who gave us the data and what year is it from? So let's say we were lucky enough to get a Schedule E. And on the Schedule E, we start to interpret some of the line items, and maybe we have to put in estimates for some, which we can. But your typical apartment building run, right? Taxes, insurance, utilities. You're doing grounds if you're in the snow areas, you're doing plowing, routine repairs, common area, office, all the stuff you'd expect to see, and then nice couple of line items for other. All right. So here we sit with a building that seems to be running pretty good at 43% of gross income. So we're saying, you know, not bad. All of our categories are in, and we were told there was a paved parking lot in 2016. So if I hadn't pre-put in the information, we would have a button that we would be pushing right now to run analysis. So what have we done? We've put in our income, and we've put in our financing, and we've put in our expenses as provided. And all of this is taken with me chattering here like 5 to 10 minutes to do. So now we have an analysis that'll get done. So this is where we start the drum roll. Is this building going to be financeable with a commercial bank? Survey says it's a go. Is first mortgage financeable? A go, green, terrific. Access your one sheet in the next section, print it, and share it as you see fit with your intended audience, in this case, a lender. So we're a go. So what is DSCR? DSCR is a bank term. It's debt service coverage ratio. We can learn more about this in the resource center, but what this basically is it's a threshold that commercial lenders use to determine lendability based on cash flow. And it's the amount that your cash flow covers each month, the mortgage, the principal, and interest. Anything under a 1.25 becomes a gray area to a problem for a regulated commercial lender. There are some capital companies that may entertain things based on different parameters that you put in. But let's say, you know, this is what we just got. So now, as I said to you, you know, we can start to geek out into some of the other mechanics of the deal. And we might say, well, you know, what are our cash flows? It's pretty cool. Our gross income, we had our expenses. This is what our operations are, right? But if we raise that rent up to where I had that 1,800, we're making quite a bit more money. So we're saying, gee, do we want to make an offer? Do we want to even see this property, right? But this could have also been how a note originated that you'd be a note buyer on, right? This is how the process starts. Owner's real world analysis. I love this. We were in on the creation of this ourselves, and this is where you get to have fun as the me's and you's of the world. So what's really happening? Here's our income at our 1,400 rent, our expenses. This is what's coming in. This is what we're paying for debt service. This is what we walk away with. So do we want to buy this building, right? Yes or no? And these are decisions we make. And if we want to buy the building, what do we want to offer? So let's get into our one sheet. And what our one sheet is this is the one-page result of our software that we're going to hand to a lender. It's a little small on the screen. It obviously prints real nice, and it's designed to download, print, and share with any intended audience. And in this case, if it's a lender, it's designed to be consumed by the lender in 1 minute or less. Okay, so what happens is all the key components a lender is looking for are right here to determine whether they want to continue the conversation with us on the property. So what we do is when we actually, if we send this electronically to a lender in our database, we block out our name and the address of the property, and we just send the lender the transaction terms, and we ask them if they want to accept or pass a connection request with us. Kind of cool. In person, you would download, print it, or you can download it and email it, and you send it to an institution. And what we say, whether you walk in to see them or whether you email, it's real simple. This is third-party software that vets my transaction against common commercial bank guidelines. Would you like to continue the conversation on the transaction with me? That's it. That's all you have to say. So think of how you're presenting transactions today, and then think of presenting it the way that I just did. And that's the change that's going on. So you have the bankers out there going, whoa, you know, where did you get this? And I can share stories with you with people sharing this with the lenders, where the lenders are just ecstatic because they feel like you're a very well prepared borrower now coming in to see them. They understand DSCR at 1.37 is likely a transaction they can do. But check out some of the other fun we have in here. Remember, my loan amount that I wanted to get was $750. Well, in banker ease, it's really higher. This property, because it's over 1.25, has a running loan support in their eyes at higher. we actually, at a 75% LTV, have some implied equity in this transaction as a banker would look at us. So it's pretty cool. And then it gets into what was our rate and terms. They can see it. Here's the run on the property. We even fit in the private lender, right? And is the private lender mortgage serviceable? Yes. So we actually told the bank that we have a private lender here and that the private lender works in the transaction. So this is how we now communicate with a bank. Now, if we were going to buy this property, we might start the process with negotiating, feeling pretty good, but then we might say to ourselves, you know, let me take a peek at how sensitive this thing really is, right? So before I get too excited that I'm going to make an offer, what happens if I only have 10 rents, right? What occurs? All right, go to my one sheet. You see the different color change, right? I'm 1.13. I'm no longer a lock as bankable. Because I'm at 1.13, the bank is likely to say to me, we're not sure if this is financeable. If you're amber or you're red, you have to refer to different ways to try to improve the transaction. It means your income is too low or your expenses are too high. So as good as we may have felt, right, about this transaction a little while ago, maybe we don't feel as good if we're that sensitive. And where this really gets us, right, is we start to understand how notes default, right? I mean, we might have run into this and said 1.37. We're pretty happy with this deal. And then all of a sudden we can only do 10 rents. What happens if we do 9, right? It's only going to get worse, right? What if we can only fill 9 out of the 12? What's going to happen, right? As we get to our one sheet, we're a red. We're nowhere near a commercial bank institutional loan now. We're not even going to get the loan from the private lender. Suddenly, is our private lender serviceable? No, right? Nothing works on this transaction now. So this is a fairly sensitive property, isn't it? So we say, if we're going to proceed, maybe we are going to make an offer a little bit lower because they're telling us 11 occupied units. Maybe we're going to ramp up due diligence. But let's say down the road, this was one of those notes we wanted to buy. You know, these are the type of things we want to sanity check. If we say we're going to buy the note, maybe it's performing, maybe it's non-performing, but what has to happen for us to get paid the way that we want on it? Or what's happening to the operator? How sensitive is the transaction? We can load any commercial loan into this and be able to determine lending thresholds and sanity check what happens with the sensitivity. What happens if rents go down to 1,200? Right? I don't know. Let's see. It's not lendable. So we really need to do some due diligence, right, before we're going to buy this, because maybe the $1 million is too much. Maybe it's not. We don't know. We're going to have to do a lot of due diligence to see. But let's say, on a happy note, right, that we actually bought this property. And so now, back where I started, is where I was in a refinance. So we have a refinance version of every one of our screeners. So I've kept my dashboard. I'm involved for a year or more, so I've kept my dashboard, and I have my old transaction loaded. So I can go back to my old data, and I can say, all right, now let me refinance this deal. Or maybe I'm the note buyer today. Either way, I'm looking at what's occurred with this property since origination. Right? So I'm going to refinance. So it's all the same information. But now I have real historical data, right? My original down payment, remember, was $250. Maybe I paid the $1 million. And maybe I've put in 10,000 cents, and maybe I've paid the loan down a little bit. So let's say the loan's at 700 today, and I'm a few years into the future. All right? So remember, I've loaded this all in, and I've said, all right, if I can do a one-to-one debt replacement on this property. Let's say I'm at 725, right? And I went in and I put in all the stuff you've seen me before. Let's say we did maintain occupancy of 11 units on this. What if we got 1,500 in rent and we outpaced the market? You know, we're pretty happy. We've got a little rosy picture here, right? But we did good. Our expenses, I put them all in from how we're running the building. We're still at the same 42, 43% that we bought it at, right? But we're doing pretty good. So now, here's that run analysis button I told you about in the beginning. So now, can I refinance this property? All right. And on a one-to-one debt replacement basis? Yes, it's a go. All right, my DSCR even improved over my original acquisition. So who's out there thinking, if I can get that high of a DSCR, why don't I cash out? Scott, let's cash out and go buy another property, right? So how much do we want to borrow? I don't know. Let's try 900 and let's try $1 million. Can we borrow $1 million against this property? Don't know. Let's see. A little tight, right? Can't quite take that. So what if we wanted to exit our private lender? Remember our $100,000 private lender? We have a $725,000 balance. Maybe we take $950 out and we say, can we afford that at 6% on this property? Just about, right? So we're just about there. So what is the magic number? Now, there's different ways to use the software to get at it easier than I am here, but this is the funnest way to present it to you and keep some drama, right? So voila, 1.26. We can refi this at $900,000 now, a couple of years later. And what happens? Our running loan support's a little higher. We've got 1.2 million in equity. We're doing a great job as an operator. We're pretty happy we bought this. And now we can cash out and exit our private lender and own the property completely. And what's our private lender going to do? Probably wants to go to the next transaction with us. We can now go buy another building. See how we do this in commercial. This is how we are able to buy properties and notes and use bank leverage efficiently on a dashboard of a legacy over time, the maturity of our business, right? And then we get into when you're fiddling around like I am, right? And you got activity all over the place. So this is how you're able, and these are your loans, and you're just out there cranking because the bank lets you do this because you're able to show them reporting. You're able to show them over time, hey, this is how I started out on this property, and this is how I'm going to refinance it, and now I want to go buy another one, right? So this is the new fun that we get to have in the market. Let me show the group real quick for anyone else out there who says, I don't want to get a second mortgage. I want to just do a business finance loan or a credit line on my building, or I want to buy a business, all right? Our business loan screener is set up a little differently than the property screeners. The results in this screener are just a guide because every bank is different with how they actually do financing for credit lines, but it's all the same input. I'm a guy in the widget business and I start to answer some questions. I enter the credit facility I'm looking for. In this case, I'm looking for a $100,000 credit facility for my business, 5-year term, 8% money. It's $2,000. What's my income? I enter in my 1040 Schedule C. I'm going fast, but this is just a quick demo. I get down to where, what's my net income for my business? Do I cash flow? You've kind of seen this in the other screener. Do I cash flow? What's available for debt service? So in my world, 55,000 is available in my business that makes 150, let's say, but the banker tells me only 44,000 is available. That's because of that debt service coverage takedown that they do. So you're starting to see they do the same thing to you in property, right? You think you're cash flowing at this number and you should get the loan. They're underwriting you at this number. And that's how come we're not getting the loan amounts that we ask for a lot. We adjust for all that in these screeners. Our financial performance of our business, is our new facility request serviceable? Yes. Go to my one sheet. I download, print, and share with a lender. I begin my conversation for a simple business credit line. Lots of fun in the software for you guys too. We have a robust resource center. Answers a lot of questions about what is a DSCR, interpreting your results. All the property screeners are explained in guides on how to use them. It's designed for and to be an education platform as much as it is anything that we can use to gain an advantage as we go in as a buyer, as a seller of property, or as a note buyer. And what if we wanted to buy the note on this, right? We're going to go back on this refinance and we're going to say, well, what would we pay for this note? You know, it's pretty decent note right now. So what would we pay, and how would we structure our proposal to somebody who wanted to sell it, or how would we structure a proposal to somebody who wants to now sell this property? So as we just wrap back up and try to and kind of recap what it is that we have here, hit my present mode. What did we just see? So we vetted the viability of doing any commercial note or property transaction. And we take control of the money in the transaction, and we know our numbers before we ever speak to a lender. So we're taking that one sheet that you saw, and we're saying to a lender, hey, modern day software, we're going to use this to do business now. So we can't overpay, can we? Because we're going to be able to know. We can sanity check all day. When that seller starts countering, we can just hand the seller ultimately a one sheet and say, no, the bank's not going to fund me. Why would I put in more cash to pay for you just because you want more money? The sellers, as we know, will always want us to pay through equity that's not there. And if we let them, because we don't have tools like this to use to vet, they're able to do it. Now, we can simply say, hey, it's our bank. We're not going to be able to do it. Our lender is not going to be able to do it. You guys saw me in that demo. What if we have a private lender? How cool would it be to sit with your private lender with a one sheet and say, hey, I've got the first position mortgage that's vettable. It meets the commercial guidelines for commercial financing. I need the equity side, right? Or if you were going private money all the way, capital company, private money, and you wanted to see what would happen at a 12% rate. I didn't run that for purposes today, but you guys saw you can change the rate in there and you can sanity check anything. What wouldn't make a lot of sense would be to put the rate down to 2% and think that that's doable. So you do have to maintain some sanity with rates and terms, but you get the point. You can determine financing thresholds and purchase prices now with lender style analytics. So for us here, what we wanted to do, special offer for everybody who sat here and listened to me yak for the last 45 minutes, is when you go to that GoGetOnCLS.com/NoteCamp page, you'll end up putting in your name and your email contact, and we'll get you an email, and in it, there'll be a download for the book, and we'll also send you a discount code for the software that you just saw. Off of that small monthly amount already, you're going to get another 10% off for being part of Scott's Note Camp today. These offers stay up usually for a little while past the duration of the camp a little bit, but there is a clock on it, so you're going to want to act if it's something that you think was interesting to you today. So what happens out there, right? Business owner, real estate entrepreneurs, right? We just have so many of these. I put up 3 of the fun ones for today. I didn't have to wait days or even hours on pins and needles for a lender to go over my numbers. Learning up front my transaction pre-qualified was terrific. Craig's a property investor who's not only bought properties using the software, but then refinanced his entire portfolio of single family and 2-family and smaller rents to be able to level up into apartment buildings. These are things we teach in the education part, and it's stuff that you'll find talked about in the book. How about this in the middle? Capital One Bank, right? Loving meeting people like you who come through and can turn that software green. Bankers are ready, willing, and able on the other end to do transactions for us because we're coming in showing them we understand the parameters, we understand how they lend, and we understand how to talk to them and prepare for the transaction. So, you can see what she says. And then we've got real estate agents and advisors who just use this now when they go on listing presentations or for any type of buy or sell transaction. So you can start screening transactions and take control of your lender relationship. And like I said in the beginning, we gain the advantage today. We have software that we use to gain the advantage. You can receive your free ebook on lender financing on your property by going to the go.getoncls.com/notecamp. And that's it for me today, Scott. So we can move into to Q&A if you like.
I think it'd be great. Definitely good stuff, John. Hang on a second here.
Sure.
So what questions you guys have on it? Because that's one of the biggest things that people are talking about. I love the fact that you can go in there and play with the software to figure, okay, we're taking this down. What do we need to be at? And then the takeout exit strategies later on. How can we get our investor out of the deal that brought in the 25% down? How can we really do a lot of that good stuff? And it really allows for a lot of flexibility when we're looking at commercial deals, whether it's the note side or it's something that's come to us from a bank, because I think it's one of the most beautiful things about what we're doing in the note business is oftentimes once the bankers find out that we're looking for stuff, they start sending us stuff to take a look at.
Sure.
Yeah.
Sure. And, we get to be prepared now. We probably were looking at it, and you can see why we created what we did. It's like there was never anything for any of us, at least me. I couldn't find anything to sanity check the lending side, right? I mean, let's face it, we take a loan. A lot of times we're doing a personal guarantee on that loan. And look at that property I just showed you. See how sensitive that was. And, you're starting to buy things thinking they're going to work. You've really got to know. And, today we get offered variable rate products, right? What if we got offered an entry rate at 5 that was going to reset at 8 down the road? Mm-hmm. Well, before I buy it, I want to see where I've got to get rents to in 5 years to be able to afford that 8, or am I getting off the raft on this property before conversion? So there's all sorts of things that, you and I both love due diligence, sanity checking, and then, being able to speak to not only the commercial lender, but the private lender with a whole different level of confidence because we're vetting numbers in software. We're not just doing it on a piece of paper.
Exactly. And that's the beautiful thing. One of the things I love about the commercial side of the business is that if you can look to be a good operator or you're buying that debt at a discount, it changes the whole numbers on that loan of then, okay, we're buying it at 50 cents of value, 50 cents of what's owed. How do those numbers work out? And it makes for a strong point to think that, hey, I'd love for you guys to carry the paper on this. Let's take it from the bad side of the books to the good side of the books. And you've got a lot of flexibility there to help structure those deals and see what they can to get finance or pull some money out of it if they need to at a later date.
Well, especially when you're dealing with a bank, and you and I both do that. And so now when I talk to them, I know how they're thinking. I don't necessarily tell them I'm screening it in front of them, right? But I see what they're looking at. So is it performing? How close is it to performing? Right? If it's not performing, we all know they're not in the business of converting properties to performing. It's not what they do. So they're going to, but you're looking at that going, what if that property was at 9? Remember I showed you it was like 0.88 on their DSCR meter. Once you understand from the book, the 1.25, and then you're saying, well, what would it take? 2 rents and I cover, right? They don't know this, or do they? So now we're going to negotiate with them. What are we going to pay? Well, before it was, we want to pay the least amount. Well, now what do we want to pay? What is the financing threshold at 9 rents or 8 rents? It'll tell us, and that's our offer, and we can now argue with them over it because we're looking at the same analytics they are.
And if you get the numbers there, it's not really an argument. It's like, hey, either you're going to finance with for us or we'll go a different route, right?
Well, it is. It's like accept pass. As I said to you, it's so easy. It's such a different way to present to them than what any of us had to do for the last, 30 years in business. I mean, you just didn't have the ability to communicate with them this way. And now you change it. And when they see it, they go, whoa, okay, I guess you do understand how we think. So now we're going to either do real business with you or we're not. Same with sellers, right? And same with all of us who are out there doing single family. And we get into a portfolio size where we realize, hey, we need to level up. And you don't realize you can get a commercial loan taking 3, 4, 5, 6 single families, bundle them together and get a commercial loan. You just input all your rents and expenses. And now you have a commercial portfolio, which now lets you sell it and do what? Level up into apartments, right? And that's a whole nother discussion for you and I, right, Scott? But how do you level up? You guys heard me say this in the beginning. And this is just stuff that we learned along the way, is you can bundle up those small deals, get a commercial loan. Now you're working with a commercial bank and you're like, hey, I've got a private equity investor. I want to buy an apartment building. And you can. You just have to demonstrate the ability to run it. So if you can't, you get a property manager. We know how to do this. But there's plenty of other information in the market with other people teaching how to do all that, right? So, but how do you finance it? It seems like that's always the void. This is how you speak their language.
Mm-hmm. Question here from somebody. When is this? What interest rate do you use or get that rate from the banker first?
Yeah, I mean, I plugged in 6 for today. It could be 6.5. Market moves all over the place. There's different places for you to get a current rate in the market. Each bank will price accordingly. You can get it from the banker first. You can call a banker up out of the blue and just say, hey, what are you doing today on X? What property type is it? I'm in this city and or in this town and I'm doing apartments or commercial or mixed use. What's your rate? They'll tell you. And then, a 5-year with a 25-year AM's nice. Some of them are 20, but a lot of this stuff will get published and you can find it online on their sites, especially the capital companies. They'll put out a rate. There's the federal open market sites that you can go to and add 2.25 basis points to it, but that's a lot of work for you. It's easier to just say, hey, what's your rate before I talk to you?
Right. Todd says with a good FICO, 4.25 is readily available.
There you go. See, and I did it at 6 today because I might have been more conservative to see how the building's going to perform. See, that's the sanity check that's out there. For me, he's got a point. I pay prime plus a quarter, but I'm also been doing it a while, right?
Yeah,
so,
right.
I mean, it's a different thing when you go in to those spaces. So yeah, he's right. You can get a lower rate. So maybe when he's using the software instead of 6, he might get more aggressive if he feels he can get it. But be careful, because if you run that software at 4.25 and the rate's 5.25, every single metric that you did is now thrown out of whack. You got to go back in and fix the rate to see where you are. And if you're on a variable, you got to predict the future. That's what happened in 08, right? Everybody in the single family world or even in the investor world was in those sexy variable products that started to reset. And we weren't. And it was because we were doing analyses like this, but we certainly didn't have software in the cloud to do it on.
Right. Marlene asked a question. Unsure if I missed it. Does the software cover if non-recourse with or without personal guarantee and FICO thresholds?
We didn't get into that part. We wanted to keep ourselves as a software company and out of the live loan application space. So we don't really get into any discussions about how qualified or unqualified you are, or if it's recourse or non. It's just straight, what are the numbers on the transaction? Mm-hmm. And that keeps us a software and education company completely out of it. It leaves us third party and lets us be able to just work with the banks on the published metrics that they give. There's times I can go in, any of us with experience can go in and demand non-recourse on a recourse deal and maybe get it. Everybody's different at what level of experience you're at and what maturity level your business is at over time.
That's the truth. And one of the things too, is if you guys want to make sure to hang around through tomorrow, we have Brad Burnett coming on to talk from Credit Sense, who specializes in helping people with the commercial lines, helping you boost your profiles to get better interest rates and lines of credit that go hand in hand with what John is talking about here. So that's one of the things that I think it's a good mixture based on that, because John's got this amazing software showing you how to rock it there. But, there's things more. Banks look at a lot more things versus just your FICO or your payment stream. Most of the time, they're going to look at the validity of the commercial property, making sure that makes sense. And you don't necessarily, this is just asset based only. You didn't see anything where asking for your social security number or anything like that to pull your credit for you there, Marlene. This is just an idea of the numbers on the project, on the commercial asset, whether it's multifamily or portfolio single-family homes or self-storage unit or anything like that. Just entering the numbers from the deal and calculating, seeing where it needs to go, and go from there.
And you just hit it. This is where we really want to convey to everybody here, who knows what level any one of you are at. From my end, I'm sitting here today, but I want to convey with a level of passion to you that when the numbers work, what Scott just said, when the numbers work on a commercial transaction, don't be afraid of the lender anymore.
Yep.
You now are armed with data that shows you're educated, and you can walk in, and once the lender sees the numbers work, the lender, it can be case by case. This is not necessarily online lending there's no face attached, but especially in the community settings, the lender may make you your first loan. You're sitting and saying, well, I have a FICO issue, or I have an issue with down payment that I've got to get from someone else, or I have an issue with no experience doing buildings. If the numbers work and you now begin the relationship on the right foot with the banker, you could be surprised what they do for you.
Exactly.
You should just be confident. Hey, look I picked a deal off a LoopNet, or an agent gave me a deal. I vetted it. It looks good. Now what I do is I say, all right, it's worth me looking at it, right? I'm not even going to look at it unless I can turn it green in my sanity check. And now I'm going to go out and take my time to see it, plug it into my due diligence, and then do I want to start up the process, confident that it's going to work or not. It depends, what experience level that you're at. Maybe doesn't matter to a local lender. The numbers work.
That's exactly right. If the numbers work, a lot of times they're not going to look at it. Now, one of the things you got to keep in mind here, John, and I want to ask this to you, how important is, if you're going to a bank on a commercial property that you have not really done before, how important is the specifics of the management? If you don't have any experience, the team that you bring along with it, what things should we be considering about that as well?
We all started somewhere, right?
Yeah.
When I first started, I didn't own my first building, right? What I did to get over the hurdle, and this worked for me, and it may work for some of you, it may not, but it worked for me, is I got a property manager to write the letter. And I walked into the bank. Back then, it was the old way, right? I had the nice little presentation book. I had the pictures on top. I had the numbers. I had the letter from the property manager. Now I'd send in a one sheet with the property manager letter. And in that, remember when you saw me put in those expenses? And there were carve-outs that I didn't get into the commercial bank underwriting piece of the software, but there was a carve-out at 5% in that DSCR computation for management. So the property manager gets depicted in the transaction, writes a letter and says, we're a local property manager. We would be hired to take over the building. This is what we charge, as long as it reconciles into the software of what you're telling the banker. You've hired experience. You've added the team. Look what you just did. You showed the banker transaction metrics, which demonstrate you understand them. You're a prepared borrower, and you've now provided property management for, even me, if I'm buying out of my geographical location, they know I'm not there every day. I have to hire a property manager. In goes the letter. So those are, and this is coming. So you'll see in the book, gang, as you get the free book, you'll look at it. Once you trigger the conversation with the one sheet, you're going to get a banker behaving differently than you've ever seen before, but you're going to get the same requests, right? The PFS, the tax return, all that stuff is coming. It's coming. So just prepare for it, have it there, and all of a sudden, when the banker asks for it off the transaction, boom, you give it to them. You'll see how I manage that stuff in the book. The banker will love you. The banker will love you. You don't have to be afraid of the banker anymore when you have software on your side.
That's the truth. And a lot of times, if you are missing something, the bankers will show you how to overcome some of those things.
That's it, when they're vested in the deal. See, if you and I, both of us experienced our life. We walk in today at any property. Let's say in Denver, we wanted to buy something. We walk in, banker says, you're not from here. We say, yeah, but look at our pretty pictures. Here's all the numbers. We're good. We're going to wait, right? You and I aren't even going to get treated with any respect by them because they don't know us and they're looking at our transactions. But if you and I send in a one sheet and we say, hey, you want to continue the conversation with us or not? Banker goes, oh, this looks like a good deal. Yes, I do. Right. Okay, so now we'll fly to Denver. Now we're doing business, right? We're going to change the way the conversation starts, which changes the tenor and the tone of the transaction from financing. We are all now empowered as commercial property investors compared to anxious, nervous, or absolute dread of the bank process. It's fun. Yeah.
One of the things we're giving as a bonus here, John, that I didn't tell you about this, but we're pulling, we've pulled, I'm waiting on the list to be emailed to me. I think it might be in my mailbox by now. Over 2,000 banks across the country, commercial banks with 5 or more branches, with their presidents, the phone numbers, that stuff, so people can reach out to them if they got something that's available. Boom. We also it also breaks down the ratios, how much assets they have that are performing, non-performing, accruals, commercial, residential, stuff like that. Has huge opportunities for people to be able to use your software on a deal, and then now they've got a list of people they can reach out to.
Well, it's funny you say it. See, I didn't know that, so I'm glad you told me, because what has happened to us is as I said to you guys in the beginning, the banker wants to meet whoever's using this software who's turning it green. Even who's turning it red, they want to meet you. You're a person doing business. They advertise for you every day. So it's funny. You'll find as people start sending one sheets in the download, print, and share world, the banks are going to start blowing up our service desk, right? Saying, hey, how do we meet these people? And we actually have that digital platform. It's built now, and everybody who gets involved will get it. It'll come to you as a free part of your membership for the rest of this year. And then we'll have it into perpetuity for people who get involved now. But you're going to be able to digitally connect with institutions like Capital One and some of these bankers that you're saying who want to meet you. And it'll be that one sheet just sent digitally. So now it's like the banker, hey, accept pass. You want to talk to me or not? And then if the banker does, your information gets revealed and you begin your dialogue off platform with the banker immediately. But it'll be funny for us because, people will do transactions. They'll send them to the banker, that 2,000 person bank list. They'll start, I will say this to you guys, what I tell everybody, pick three, right? Yeah. Especially geographic banks. Let me give you some insight. Banks unless you're dealing with an online lender, that's a monster lender that does the whole country like Wells Fargo, right? Banks like to do transactions within 50 square miles of where their base is or where their lending center is for the property, right? So if you're in Denver, right, unless it's a monster lender, you're not sending it to a Boston community bank, right? So that's just not how it works. You need a Colorado lender likely, but pick three and then send out 3 one-sheets and then wait. And then they'll immediately get back to you because they see this thing and they just go, wow, they get back to you in a day or less. And then you can pick one to do business with. Don't spam the banks with the one sheet because now it's kind of unfair to them, right? I mean, you certainly can take the tool once you know the DSCR is good. The guy who's saying to me, I have got good credit, I can get a lower rate. Yes, I grind rate all the time with the software. Sure, I do, right? Because you can once you're at that level of experience. But if it's your first or second transaction, just work with the banker, get the experience before you start saying, hey, the DSCR is 1.37. I want a lower rate.
Well, but the important thing is that 50-mile race, I'm glad you brought it up, because they're going to want to put eyes on the asset most of the time. They're going to do.
Well, yeah, and they have to do inspections, and it's all part of it. It's in the book. It tells you what they do. They're going to appraise the property. They're going to determine value. They're going to inspect it, but you're prepared for all that stuff. And that's the kind of stuff you kind of like, because you want to know if the thing's got a leaky roof and no one told you, you want to find out. And now you can revisit with that one sheet with the seller. Hey, bank's giving me less, or bank's making me set aside money to fix the roof. We got to look at what it does to my deal. I got to change the terms now, and it's really not you doing it. It's part of the inspections that they did. So there's times I really like when they do some of their due diligence in the transactions once we agree on numbers. But once we agree on numbers, you'll find they work really hard to close the transaction because they know the numbers work. They want it, right? So they'll help you with a lot of things that you think are a problem in the file. Right.
And as an ex-banker, I'll tell you this. When I was banking for JP Morgan Chase and they run this huge expansion, they want commercial loans. That's their favorite thing. They'll do some residential stuff, but they prefer commercial banking, loans, commercial accounts. That was always the thing that always paid us the most. And that's why, like John just said, if you're dealing with a commercial mortgage broker, commercial banker, and they start seeing this stuff, they want to get paid because that's how they're making their bread.
If they're going to be honest with any of us at any given time, the commercial loan department of any, for sure, community bank, possibly even nationwide larger institutions, is the most profitable part of the bank is the commercial lending department. No doubt. If you think of it, the deposit money they pay us is what, 1-2%, and they're going to lend it out at what number? And they're going to lend it out over X number of years, and they're looking at these assets to perform. They've got DSCR underwriting, they've got their cap rate or their some other market value appraisal they've done, and they're looking at us as the operator, right? So they're doing a lot of due diligence in the deal. This is the default rates for them aren't as high unless there's a contagion in the market like '08 that changes. things. The default rates are not a disaster. They actually do really well, but it's, for all of us, it's let's learn how to navigate the waters. And once you do, the sky's the limit. You can go from $30,000 line to 100,000 to 500,000 to 2 million to 5 million to 10 million faster than ever before right now, right? Just by demonstrating competency and speaking their language as you vet transactions. People don't realize that there's still that trepidation of this process that, and anybody who's done one knows, they know what we're saying. I mean, it can be very arduous, but you can also do it where it doesn't have to be by how you go in.
Yeah. Todd asked a question, is there a grading basis of an A, B, or C property?
Not in the software. So the software is just purely looking at numbers. Lenders are going to do that type of analysis, as to what type of property that it is. That can affect rate, that can affect term. It certainly affects cap rate valuation. Has nothing to do with loan to value, though, based on the numbers. So again, the software is just designed it's just pure banking. What is the first mortgage financeable? Yes, no. Does the private lender fit? Yes, no.
Makes a lot of sense there. Guys, it's go.getoncls.com/notecamp. Go.getoncls.com/notecamp. Important. Take advantage of it. Get on there. Mess around with it. You're going to love it. You're going to love that book. Read it. John provides a wealth of experience. What was the song we said? Ain't talking about love.
Love, yeah. The bank's love is rotten to the core.
Gonna give you some lone love out there.
So we got 10% off for everybody who was on here, and you do, as you get the annual subscription, because you'll want the dashboard over time, so you can always plot your refi and any credit lines you want to do. You do get 30 days free look at the software in that case. So you really can just, like Scott said, you can work it out and do all the sanity checking that you just saw me do, and see if you can make it work for you. Right.
A couple questions here before I let you go. Wayne asks, sure. What does the debt service ratio of 1.25 compare to as a general cap rate? Do you know?
You can fiddle around on a calculator, maybe 6.5, 7. I'm just guessing, sitting here, because it's a 75% LTV component that's the preset in the software. So, you can fiddle with it. We know that most of the appraisals that are going out there in cap can be higher. You can, depending upon where you are, 8, 8.5, 9. I mean, you just don't know. If I'm in Cambridge, Mass, though, it's 2. So you just don't know where you are as far as what that cap rate will be. The cap rate is just for another day. If he ever wants to talk to me about cap rate, reach me through the support desk at CLS. I'll be happy to talk to him. It's one of my favorite rants, Scott. I'm an old Wall Street guy. When I started out, like you said, you were an old banker. It was funny. I almost got hired by JP back in the days when Van Halen 1984 came out. and it was just, the cap rate's up for debate. But yeah, you can fiddle with it on a 75% LTV and see where it comes in.
Yeah. Marlene asked a question, was vacancy and reserves covered? And thank you.
Yes, so that's a great question, because I blew past some of the tech stuff in the interest of time. When you get inside the software, Marlene, you're going to see where the carve-outs are actually above the line. That's important. It means they're already implied in that DSCR result from the software. So there is carve-outs for management, there's carve-outs for reserves, there's carve-outs for 3 or 4 different things that are in there. They're designed to be nationwide. Some regions have different carve-outs, but the bankers make those adjustments when they decide if they want to accept or pass on the connection request.
Good stuff there. Yeah. Any other questions for John before we let him get back to his Saturday afternoon? As always, John, man, thank you so much. Such great stuff. So many great nuggets on there. Great insight. Such a great, robust piece of software to really help people see if the deal will hold water. That's one of the most important things, whether it's going to hold water, make sense to run with, or how to figure out how we got to structure this thing or get it where it needs to be to make it attractive in the banker's eyes.
And listen, anybody out there has any questions for us, we've got a robust service desk.
Yep.
You'll see that even the chat is on the site. I mean, just reach out and we get right back to you. We're happy to help you.
Awesome. Well, hey man, I'm gonna let you get going on your rest of your Saturday. Enjoy the rest of your weekend. All right, brother.
Hey, thanks for having me. This was great.
Thanks, man. I
All
appreciate
right,
it.
see you soon. Thanks.
Yeah. All right, guys. We're going to take a quick, about a 17-minute break. We've got Dave Foster coming on to discuss 1031 exchanges, which is kind of wraps in with some of the things that we're talking about with John there, how to calculate it. So I think you're going to find it really valuable. Dave's one of the foremost nationwide experts on 1031 exchanges, so we're honored to have him as well. So, like I said, take a 17-minute break, go right restroom, grab a cold beverage. It's Saturday. You're allowed an adult beverage at Note Camp. If you want to pop a top, I'm not going to be bothered by it. So see you back in 17 minutes, everybody.